Now I am going to discuss how to prepare financial statement of the sole proprietorships. Right, it has given trial balance 31st March 20. It has included all the income, expense, assets, liability, and equity. Normally debit side available, asset and expenses, and credit side included liability, income, as well as equity. Normally, right, it has given trial balance, commission income, commission expense, rent income, then fixed deposit available, allowances for expected losses. This is a provision for doubtful debts, and bank loan fixed deposit available. Opening inventory is given here. Inventory 1st April 19. Our accounting period end of the year 31st March 20. And donation, it has given trial balance. And salary, think about important salary. You have to decide net or gross salary. And impairment loss on trade receivable also given. That is a bad debts. Trade receivable value is given. Sales, drawings available, trial balance also. And accumulated depreciation, it has given opening balance, building as well as motor vehicle. And all other income and expenses given. Think about when business going to prepare financial statement. From the beginning, information should be collected by using source documents. Then information should be recorded in the prime and books. Then information should be recorded in the ledger. By closing ledger accounts, trial balance should be prepared. It has given trial balance. Now I am going to discuss how to prepare financial statement based on trial balance. Right, when we are going to prepare the financial statement based on trial balance, from the beginning, adjustment should be done. Adjustment should be done. Adjustment also cannot be done from the beginning. From the beginning, interrelated adjustment should be done. If it has given sales invoice completely omitted, it should be done from the beginning. Think about this one. In this example, example number 5, it should be done from the beginning. Sales invoice complete omitted. And if it has given goods sent on sales or return basis, at the same time should be done. And at the same time, inventory adjustment, it has given inventory additional number 10, as well as bad debts and doubtful debts. Additional 6. Those are interrelated adjustment. From the beginning, if it has given sales invoice complete omitted should be done. And if it has given goods sent on sales or return basis, after that should be done. At the same time, inventory adjustment as well as bad and doubtful debts, those are interrelated adjustment. Should be done from the beginning. Right, first one, draw the format. There's income statement for the year 31st March 20 and statement of financial position, that is a balance sheet as at 31st March 20. This is a format. Income statement for the year in 31st March 20 and sales from the beginning. Sales return should be deducted. Then composition of cost of sales should be included here. Opening stock plus purchase plus carriage inwards plus import duty. And if it has given purchase return should be deducted. Then goods available for sales. From that value should be deducted damage stock, stock donation, stock drawings, as well as closing inventory. Those are should be deducted if it has given only additional information. If it has given trial balance, those are cannot be deducted here. Then another income, interest income, dividends income, rent income, commission income, if available, should be included here. Then expense should be categorized as a distribution expense, administration expense, other expense, as well as finance expense. This is a format for income statement. Think about this part, very important. Those are should be deducted if it has given only additional information. If those are given in the trial balance, should not be deducted here. Very important. Then see the statement of financial position. also as at 31st March 20. This one as at 31st March 20, but income statement for the year end 31st March 20. Assets should be recognized separately, non-current assets as well as current assets, and liability also non-current liability and current liability. Then equity, its composition should be disclosed. Opening balance plus profit and minus drawings. Right. We are going to discuss how to prepare financial statement based on trial balance. From the beginning, additional information should be done. Now think about from the beginning, additional 5 should be done. Sales invoice completely omitted. Sales invoice. Therefore, this value effect for data as well as sales. Sales invoice relevant for credit sales complete omitted. Therefore, 460,000 value in 1000. This value should be added to the data as well as sales. Therefore, it is effect for data. You have to calculate correct data value as well as correct sales value. Therefore, data and it is effect for sales also complete omitted. Therefore, this value should be added to the both data and sales. Therefore, think about trial balance. It has given sales value. Sales correct value. Sales value is given 24,760,000. It has given values in 1000. 24,760,000. Therefore, you have to calculate correct sales value and added 460,000 also. Sales invoice complete omitted. You have to calculate correct sales value and trade receivable data value also given 740,000 for that value also. Then plus 460,000. Think debtors account debit, sales account credit. Sales invoice complete omitted. It is effect for debtor and sales. Debtors account debit, sales account credit. Both debtor and sales increase should be added. Then think about goods sent on sales or return basis. It is also effect for debtor and sales. It has given goods sent on sales or return basis. Goods sent on sales or return basis. It has given cost value. Important. And invoice price is given 550,000. This one very important. It has been recorded as a credit sales. Already recorded as a credit sales. Therefore, it has been recorded. This part very important. It has been recorded already as a credit sales. It means debtors account debit, sales account credit, invoice price, this value included data and sales. But it has given at the end of the accounting period, 40% of goods were remain out of sales or return based stock. It means 40% was not sales. It has recorded already as a credit sales. Invoice price included data and sales, but 40% not sales. Already included. Therefore, based on selling price, 40% should be removed from data and sales. 550,000 from that value, 40% not sales. You have to calculate 40%. Therefore, 40% value equal 550,000 into 40% equal 220,000. Think about it has already recorded as a credit sales, but 40% not sales. Therefore, this value should be deduct from data and sales. It has already recorded as a credit sales. Now it should be removed. Therefore, that value should be deduct from data as well as should be deduct from sales. Think we have to calculate correct sales value and data value. And it is effect for inventory also. If it has not sales, its cost value should be considered as a closing inventory. Therefore, cost value equal 420. From that value, 40% not sales. Therefore, you have to calculate 40%. Therefore, 420 into 40%, 168,000. Therefore, this value also should be considered as a closing inventory. At the same time, inventory adjustment should be done. Let's give an inventory adjustment additional 10. Try to calculate cost value. Think about cost of inventory. It has given cost of inventory available at the store. Cost of inventory 752,000 as at 31st March 20. This is the inventory available at the store and goods sent to the other business on sales or return basis. If it has not sales, its cost value also should be considered as our inventory. Therefore, cost value it has given available at the store as at 31st March 20, 752,000 and add 168,000 also. Goods sent on sales or return basis. If it has not sales, its cost value also should be considered as our inventory. Then calculate net realizable value, also given as at 31st March 20, 732,000, then plus 168,000 also. Both cost and NRV should be added. Then calculate correct cost value. Think about goods sent to the other business on sales or return basis. If it has not sales, its cost value should be added both cost and net realizable value. Therefore, this is a correct cost value and correct NRV equal 900,000. Then this is the value should be adjusted as inventory. Think about goods sent on sales or return basis. At the same time, inventory adjustment also should be done. Then cost value of inventory equal 920,000. This is the value should be included under cost of sales calculation based on matching concepts. Here now there are 3 marks available. Cost value should be included under cost of sales calculation as a closing inventory. Net realizable value that is lower. Therefore, under current asset as inventory should be included 900,000. And NRV lower than the cost value. Difference 20,000 should be considered as a stock written off. Therefore, stock written off value equal NRV lower than the cost value. Difference value equal 20,000. There are 3 marks available. Based on matching concept, cost value should be included under cost of sales calculation and low amount equal 900,000. Therefore, low amount based on prudency concept under current assets and stock written off equal 20,000. Then disclose on the financial statement as a closing inventory. Second column, cost value 920,000. And stock written off and other expense as a stock written off all the expense should be included first column 20,000 and current asset as inventory based on prudency concepts 900,000. Low amounts. Think about there are 3 marks. Low amounts, stock written off as well as cost value as a closing inventory. Then inventory adjustment okay. Goods sent on sales or return base also okay. At the same time, you have to complete bad debts and doubtful debts adjustment. Interrelated. It has given 80,000 should be written off from debtor as impairment loss on trade receivable. Impairment loss mean bad debts. Impairment loss equal bad debts. Therefore, further 80,000 should be written off as impairment loss on trade receivable. Therefore, impairment loss on trade receivable. Trial balance also given balance. Therefore, this value not recorded yet. Therefore, this value debtors account credit, bad debts account debit. Therefore, this 80,000 should be deduct from debtor as well as it should be added to the impairment loss. If it has given trial balance, that value also should be considered Impairment loss on trade receivable, it has given 40,000 balance. This value already recorded. Debtors account credit, bad debts account debited. Therefore, 40,000 opening balance. Trial balance, it has given balance and added 80,000 also. Therefore, this value is in 1,000, 80,000. Bad debts account debit. Impairment loss on trade receivable equal bad debts. Debit, trade receivable, debtors account credit. Value equal 80,000. Then total amount, this is the value should be considered as expense in the income statement as impairment loss on trade receivable. And it is given balance of allowances for expected losses on trade receivable as at 31st March 20 should be 10% of the remaining balance of trade receivable. Then remaining balance of trade receivable, think about debtor closing balance. 740 plus 460 minus 220 minus 80. Therefore, correct trade receivable amount equal 900,000. From based on that value, you have to calculate allowances for expected losses as at 31st March 20. Balance of allowances for expected losses as at 31st March 20 equal based on closing balance of trade receivable 10%. Therefore, 10% equal 90,000. This is the allowances for expected losses. And this is a trade receivable. Therefore, as a trade receivable, as a debtor under current assets should be included this value. And as allowances for expected losses, this value should be included under current assets. Therefore, debtor minus provision for doubtful debts, it is equal allowances for expected losses. And this is equal trade receivable, debtor. That value should be included financial position. Therefore, under current assets, as a trade receivable, it is equal debtor, trade receivable. Trade receivable equal debtor. Correct value should be included. First column 900,000. And from that value should be deduct allowances for expected losses based on this value 10%. Deduct allowances for expected losses. Then correct value should be included. Second column. As well as you have to find out expected losses under provision over provision. This is the allowances for expected losses. At the same time, you have to calculate expected losses. It may be under provision, it may be over provision. Trial balance also given balance allowances for expected losses. Allowances for expected losses opening balance equal 60,000. Opening balance equal 60,000, but closing balance equal 90,000. Therefore, opening balance under value. Therefore, expected losses under provision. Opening balance is lower. Therefore, trial balance it has given 60,000. Therefore, closing balance equal 90,000. Opening balance equal 60,000. Therefore, this is the under provision. This value should be included under distribution expense as expected losses on trade receivable. As expected losses on trade receivable, expected losses 30,000 under distribution expense. Think about under provisions and over provisions should be recorded. On trade receivable, expected losses on trade receivable, first column should be included only 30,000. As well as impairment loss on trade receivable, also expense. This is the impairment loss. Total value on trade receivable 120,000. Also distribution expense, first column 120. Think about trial balance also given impairment loss. Additional information also available. Total value should be considered as impairment loss on trade receivable. That is bad debts. But doubtful debts, expected losses should be included difference value. If it is under provision should be considered as expense. If it is over provision should be included here within brackets. And under current asset as a trade receivable thing, how much should be disclosed? Interrelated adjustment. Sales invoice complete omitted from the beginning. At the same time, goods sent on sales or return basis, and it is effect for inventory adjustment also, as well as bad debts and doubtful debts. This is impairment loss on trade receivable as well as expected losses on trade receivable. And correct sales value also to be included in income statement. At the same time, correct sales value, calculate correct value, plus value add, and minus value deduct. Correct sales value. Therefore, 24,760 plus 460 minus 220. Correct value equal to 25,000, 25 million. Therefore, this is value should be included in income statement as a sales. Correct sales value should be included in income statement. Last column, 25 million. That value should be included second column. If it has given sales, it should be deduct from that value. Then correct value should be included last column. Right. Then interrelated adjustment. Okay. All other adjustments should be done from the beginning. Then start first one. It has given 450,000 worth of stock was damaged due to flood. An insurance company agreed to pay 80% compensation for damaged stock, but compensation not received until 31st March 20. There are 3 marks available. First one, think about damaged stock value equal 450,000, but insurance company agreed to pay 80% as a compensation. Therefore, from the beginning, insurance receivable not received yet. Damaged stock value equal 450,000. Based on that value, 80% insurance company agreed to pay as a compensation. Therefore, 450,000 into 80%, 600,000, that is insurance receivable. Then balance part. So here difference value equal 450 into 80% equal 360,000. This is a value receivable. Insurance company agreed to pay as a compensation. And think about balance part. Damaged stock expense. Damaged stock expense equal balance part should be considered as expense. It is equal 450,000 minus 360,000. Therefore, 450 minus 360, that is a value should be considered as expense, as a damaged stock expense. And think about this is the damaged stock. Purchase account credit, damaged stock account debit. There are 3 marks available here. Insurance receivable should be included under current assets. As a damaged stock expense should be included under other expense only 90,000. And cost value, total value, it has available additional information. This double entry, purchase account credit. Purchase then damage. Therefore, this value should be deduct under cost of sales calculation also. Cost value should be deduct based on matching concept under cost of sales calculation. And insurance receivable under current assets. Balance part, damage stock expense under other expense. Therefore, 450,000 as a damage stock. Second column within brackets. Based on matching concepts. Purchase account credit, that value should be deduct here. But as a damage stock expense under other expense, as a damage stock, as a expense should be considered only 90,000. And insurance receivable equal 360,000 under current assets. As a insurance receivable asset. Think about there are 3 marks available for damage stock. Sometime it has given damage stock in the trial balance. If it has given damage stock in the trial balance, in this situation, cost value should not be deducted under cost of sales calculation, but all other adjustments should be done. The next one, 11 for EPF and ETF, very important adjustment. Try to recognize salary also included in the trial balance gross or net salary. Just given salary, trial balance, salary is expense, therefore we can see debit side. This is salary. Try to recognize. Sometime it may be gross salary, sometime it may be net salary. Right, see the adjustment. It has given employer contribution for EPF and ETF, given percentage, employer on gross salary of the employees, and EPF contribution of employee is 10% of the gross salary of the employee. This is the important thing. Both company and employee contribution for EPF and ETF has not been recorded for entire year. Both company and employee contribution for EPF and ETF has not been recorded. Think about employee contribution for EPF. This is the thing you have to consider. If EPF contribution of employee has not been recorded in this situation, trial balance it has given gross salary. So net salary. This is a net salary. Think about this part. How decided? Contribution of employee for EPF. If it has not recorded, trial balance it has given net salary. Net. Therefore, gross salary should be calculated from the beginning. When business is going to calculate net salary, it means gross salary minus EPF employee. 10% deducted from gross salary. From gross salary deducted net 10%. Contribution of employee deducted, balance part paid in cash. That is a net salary. Therefore, from the beginning, gross salary should be calculated. Gross salary equal, it has given trial balance net salary 450,000. Contribution of employee has not been recorded. Therefore, this value divide by 90. How to calculate 90? 10% from 100. If gross salary 100, 10% deducted. Then net salary equal 90. Divide by 90 into 100. Therefore, this is the gross salary. Based on this value should be calculated EPF and ETF contribution of employer and employee. Then try to calculate EPF employer, EPF employee, and EPF employer as well as ETF employer. All the values should be calculated based on gross salary. Therefore, gross salary equal 500,000. Contribution of employee equal 10%. Therefore, value equal 50,000. And employer percentage is given 15%. Therefore, here value equal 75,000. $500,000 into 15%. Value equal 75,000. And here ETF contribution of employer 5%. Also should be calculated based on gross salary. Therefore, 5% equal 25,000. First one, try to recognize gross or net. It is depend on EPF contribution of employee. Then think how to calculate gross salary if it has given net salary. Then based on gross salary, value should be calculated. Then you have to know how to record in the ledger account also. You have to prepare, there are 5 ledger accounts: salary accounts, EPF expense, EPF payable, and ETF expense as well as ETF payable. There are 5 ledger accounts should be prepared now. Salary, EPF expense account, EPF payable, ETF expense account, ETF payable. From the beginning, salary account as a balance brought forward. It has given salary trial balance 450,000. That value should be included as a balance brought forward. Then contribution of employee effect for salary. This 50,000 salary account debit. Think about double entry. Salary account debit, EPF payable account credit. EPF payable account credit 50,000. Therefore, here as a salary, name of other ledger accounts, and salary account debit as a EPF payable. Think about double entry. And contribution of employer 75,000, EPF expense account debit, EPF payable account credit. Another expense, it is not effect for salary. Therefore, EPF expense account debit as a EPF payable, and EPF payable account credit as a EPF expense. Think about EPF payable account effect both contribution of employer and employee. But contribution of employee salary account debit, EPF payable account credit. Contribution of employer, EPF expense account debit, EPF payable account credit. ETF only give their contribution by the employer 25,000, another expense. ETF expense account debit 25,000, ETF payable account credit. Therefore, ETF payable account credit as ETF expense, ETF expense account debit as ETF payable. Then think about salary, EPF expense, EPF payable, ETF expense, and ETF payable. Salary account balance total value equal 500,000. That is the value should be considered as expense. Salary 500,000 expense, EPF expense 75,000, ETF expense 25,000, and EPF payable account total amount equal 125,000 liability. EPF payable, ETF payable also liability. Therefore, there are three expenses. As salary total value 500,000, 75,000, and 25,000 under expense, administration expense. Then record on the financial statement under administration expense as a salary, salary account total value equal 500,000, and as a EPF expense, contribution of employer as well as 25,000 contribution of employer, that is a ETF expense. And under current liability as a EPF payable, under current liability total value 125,000 contribution of employee and employer as well as ETF payable value equal 25,000. Second column should be recorded. There are 5 marks available. Here 2 marks as well as under administration expense there are 3 marks. Try to recognize gross or net salary. Then think how to calculate gross salary if it has given net salary. Then think how to calculate value based on gross salary. Then think how to record in the ledger accounts. There are 3 expenses: salary expense, EPF expense, and ETF expense. EPF payable and ETF payable, those are liability. And then second adjustment okay. And third one, 250,000 worth of stock was donated to the flood affected family. Think about donation available in the additional information, stock donation, double entry purchase account credit, donation account debit, and given donation trial balance also. Therefore, as expense should be considered total value, donation expense. Trial balance also given donation. See the trial balance. It has given donation trial balance. Donation is expense. If it has given trial balance, there were double entry. This is the donation. 400,000 available trial balance. And additional information also given donation. Therefore, total value should be included under income statement. Therefore, total donation equals 650,000. That is the value should be included under expense. But this value should be deduct under cost of sales calculation also. There are 2 marks available. And expense should be include total value, donation, and only under cost of sales calculation should be deduct this value 250,000. Therefore, as a donation, under cost of sales calculation, only value included in the additional information. But donation expense and other expense as a donation, total value 650,000 expense. Under cost of sales calculation, donation should be deduct if it has given only additional information. Then additional fourth one, think about 290,000 worth of stock obtained for owner for personal use. That is a drawings. Drawings also given trial balance. Drawings available trial balance. Under equity should be deduct total value. And this is stock drawings, double entry, purchase account credit, drawings account debit. Therefore, this value should be deduct under cost of sales calculation as drawings, but under equity should be deduct total value. Trial balance also given drawings. See the trial balance, it has given drawings. If it has given trial balance, it means it has already recorded drawings. Value equal 210,000. Therefore, under equity should be deduct total value 210,000. It has available trial balance plus 209,000. Therefore, total drawings equal 500,000. This is value should be deduct under equity, but only 290,000 should be deduct under cost of sales calculation. Value included under additional information as stock drawings. Cash drawings should not be deduct here. Cash drawings if it for cash. Only stock drawings, if it has given additional information, should be deduct under cost of sales calculation. But under equity, think about here also drawings should be deduct. Second column, total value. Total drawings equal 500,000. Trial balance include drawings, that value plus additional information include value. It may be cash drawings, it may be stock drawings. But only under cost of sales calculation as a drawing should be deduct stock drawings if it has given additional information. Then additional fourth one, okay. Fifth one we have discussed. Sixth one we have discussed. And depreciation. Depreciation billed in 10%, motor vehicle 20%. Therefore, you have to calculate depreciation based on cost value. Billed in depreciation as well as motor vehicle depreciation. First one, think about built in. Built in depreciation. At the same time, you have to calculate built in accumulated depreciation also. Then think about accumulated depreciation of building. Trial balance it is given, opening balance also. Motor vehicle also same way. Motor vehicle depreciation you have to calculate as well as motor vehicle accumulated depreciation. Accumulated depreciation of motor vehicle. Opening balance it is given. Right. Based on cost value 10%, building depreciation, motor vehicle 20%. Accumulated depreciation also given trial balance. Then think about trial balance. Based on cost value, think about build-in. It has given build-in 1,300,000, motor vehicle 1,900,000. And build-in accumulated depreciation opening balance is given 270 as well as 520. First one, build-in depreciation should be calculated. Build-in depreciation as well as motor vehicle depreciation should be calculated. Building value equal 1,300,000 based on that value 10% equal building depreciation 130,000 and motor vehicle it has given 1,900,000 based on that value 20%. Therefore here value equal 380,000. Then accumulated depreciation closing balance should be include financial position. Accumulated depreciation is given trial balance. Building 270 520 270 520 270 520 that is opening balance plus annual depreciation. Annual depreciation also calculated. Therefore closing balance equal 900,000 and opening balance equal 270 plus annual depreciation equal 130. Therefore closing balance equal 400,000. Therefore this value should be include financial position also. Then first one depreciation. Building depreciation as well as motor vehicle depreciation should be included under building depreciation, administration expense, motor vehicle depreciation, distribution expense. First one record income statement. Building depreciation and administration 130,000 and motor vehicle depreciation should be include 380,000 under distribution expense and unaccumulated depreciation and non-current asset also should be disclosed. Cost value should be include first column and second column accumulated depreciation. Land, building, motor vehicle. Land should be included from the beginning. Trial balance is given opening balances. Land, building, motor vehicle not change. Therefore cost value should be included under non-current assets. If it has given disposal, if it has given purchase, those are changed. But in this example, it has not given purchase or disposal. And closing balance of accumulated depreciation building 400,000 and motor vehicle closing balance equal 500,000. So motor vehicle closing balance equal 900,000. Then take net book value also, cost minus accumulated depreciation. Building, land not change. Cost minus accumulated depreciation. Take the net book value. Then take it total amount also. Here total amount equal 2,700,000. Cost minus accumulated depreciation. As accumulated depreciation closing balance should be deduct. Annual depreciation should be included under expense. Right, next one electricity expense. Next one additional 8. Think about accrual expense. Electricity charges 42,000 for the month of March 2020 is to be paid. That is a accrual electricity. Therefore think about electricity expense. Trial balance also given electricity expense. As expense we have to consider total value. Trial balance also given electricity expense account balance. This is balance electricity expense. Cash account credit, electricity expense account debited. This is paid in cash 471,000. Income statement should be included paid or not total value. Therefore 42,000 also should be added. Plus here 471,000 plus. Therefore total value equal. Correct value should be included income statement 473,000 and 42,000. This is accrual electricity. Income statement should be include total value 473,000. Here total amount equal this one 471 plus 42 513 here. Therefore, as expense 513 and 42,000 accrual electricity. Under administration expense 513,000 as a electricity expense. As an electricity expense and 42,000 under current liability as a accrual electricity. As a accrual electricity. Then next one, rent expense 13,000 included in the trial balance is relevant for next financial year. That is a prepaid rent expense. Think about as a rent expense we have to consider after deducting prepaid value. Trial balance also given rent expense. That is a value paid in cash. But it is included some value relevant for next financial year. Rent expense include trial balance 124,000. That is a value paid in cash. But prepaid rent available, prepaid rent. Therefore, as a rent expense, 124,000 available trial balance. Think about as a rent expense and administration expense should be included only after deducting that value. From that value should be deduct 13,000 as expense. Trial balance it has given as a rent expense 124,000. This is a value paid in cash, but it is included 13,000 relevant for next financial year. Therefore, 124,000 minus 13,000 as expense should be considered only 111,000 as rent expense. And prepaid rent under current asset 13,000. Under administration expense as rent 111,000. Rent expense and prepaid rent 13,000 should be included under current asset as a prepaid rent. As a prepaid rent. And then additional information, okay. Think about goods sent on sales or return based adjustment available. Sales invoice complete omitted. Inventory adjustment and EPF and ETF adjustment available. Damage stock, donation. Right, then see the trial balance. Trial balance also there are some adjustment available. Fixed deposit should be done from the beginning. And fixed deposit interest also given. First one, fixed deposit should be included in between current assets and non-current assets. Then you have to calculate FD interest also. This is FD interest income received in cash. From the beginning, this value 900,000 financial position in between current assets and non-current assets. Financial position as a fixed deposits. Value equal 900,000. Then FD interest should be calculated. Under working, you have to calculate fixed deposit interest. Fixed deposit interest income. Fixed deposit interest income. Fixed deposit value equal 900,000. Based on that value 20%. Therefore, FD interest income equal 180,000. Trial balance it has given 150,000. That is a fixed deposit interest income received in cash. Therefore, balance part fixed deposit interest income receivable. Fixed deposit interest income receivable equal 108,000 minus trial balance available 150,000. Therefore, under current asset 30,000 should be included as a FD interest income receivable. FD interest income and other income 180,000. Trial balance also given balance 150,000. Therefore, receivable equal 30,000. Therefore, fixed deposit interest income and other income, second column 180,000. Calculate value, not 150. And fixed deposit interest income receivable under current assets, receivable value equal 30,000. Difference value. Fixed deposit should be included in between current and non-current assets. And bank loan also available. There is an adjustment loan for bank loan also. It has given bank loan value equal 800,000, 15%. And loan interest also given. This is interest paid in cash. Therefore, accrual interest also should be calculated. First one, bank loan should be included under non-current liability, 800,000. Then loan interest should be calculated. Prepare working for that. First one, loan should be included non-current liability. Bank loan, 15% bank loan, 15% bank loan. Value should be included second column, 800,000 value. Then loan interest should be calculated. It has given 16% bank loan interest. Bank loan interest expense. Bank loan interest expense, loan will be equal 800,000. Based on that value 15%. Therefore, value equal 120,000. This is the value should be considered as expense. But trial balance available as a loan interest 90,000. Then can be calculated accrual loan interest. Accrual difference value not paid in cash. Accrual loan interest. Accrual loan interest. Difference value 120,000. That is a value should be considered as expense. But trial balance available 90,000. That is a paid in cash. Therefore, 30,000 not paid. Accrual loan interest. As a loan interest expense 120,000. Accrual loan interest equal 30,000. Therefore, loan interest finance expense. Loan interest 108,000. 120,000. Calculate value. But trial balance include 90,000. That is a paid in cash. Under current liability as accrual. As accrual loan interest. As accrual loan interest, 30,000 should be included under current liability. Those are the adjustment. Adjustment should be done from the beginning. From the beginning, interrelated adjustment should be done. Then all other thing, there is no double entry, only single entry. Commission expense should be included distribution expense. From the beginning should be complete. Commission expense, distribution expense, rent income, other income, carriage outward, distribution expense should be recorded first column, all the expense. Dividends income and other income second column. Sales return should be deduct from sales second column. deduct within brackets. And purchase should be included first column under cost of sales calculation. Purchase return also should be included first column within brackets. Carriage inward should be included first column under cost of sales calculation. Import duty also under cost of sales calculation first column under purchase. Investment in between current and non-current assets under fixed deposits. Dividends received under other income second column. And discount allowed under distribution expense first column. Warranty expense also under distribution expense first column. Inventory opening balance, this is opening inventory, also under cost of sales calculation but second column. Prepaid insurance under current assets. Cash balance also under current assets. And capital under equity, that is a opening balance. Capital. Provision for warranty liability under current liability. Stationery expense under administration expense. Donation we have considered. Telephone expense also administration expense first column. All the expense first column. Advertisement expense, distribution expense. Trade receivable we have considered. Insurance, administration expense and administration. Then impairment loss we have discussed, salary we have discussed, sales we have discussed, trade payable under current liability, second column, this value. Accrual telephone also current liability. Only current liability, those are already adjusted. Then land building we have discussed already, accumulation okay. And water bill under administration expense. Audit fee also administration expense. Commission income should be included under other income second column. From the beginning, additional information should be done. After that, bank loan and fixed deposit should be complete. All other information included in the trial balance should be done from the beginning. Then complete income statement as well as statement of financial position. Complete income statement and statement of financial position. Net profit can be calculated. Net profit. Therefore, this is the income statement. Sales minus sales return, take the answer. This value can be included second column also. Then purchase plus carriage inwards import duty. Here total value should be included here. Then opening stock plus purchase value, take total amount here. Then deduct all the deduction. That is the cost of sales. Sales minus sales return. This is the correct sales value. From that value should be deduct this one. Here value equal 600. And then gross profit can be calculated. Sales minus cost of sales equal gross profit plus other income total value here. Then gross profit plus other income take answer here. Then total expense should be included second column. Total expense. Then take the total expense. Administration, distribution, other finance. Then net profit can be calculated. Net profit. Here loan interest will equal 120. Loan interest will equal 120. Therefore, total expense equal 2015 plus 1874 plus 760 plus 120. Total expense equal 4769. Then 10,331 minus therefore 5,562. That is profit. That value should be included under capital profit 5,562. And accrual loan interest equal 40. Accrual loan interest. This value equal 30. Trial balance it has given 90,000 paid in cash. Therefore, here 662. Then take here total value 120 plus 562 minus 500. 120 plus 5,052, 5,562 minus 500. Therefore, here value equal 5,182. Then plus 800, 5,982. Then plus, therefore total amount equals 6,644. Non-current assets total value. Then investment and fixed deposit total value here. Here no need to calculate total values. Total amount no need to calculate. Then take current assets total amount also. Then take all three values. This is total assets. And think about opening balance plus profit minus drawings. Equity closing balance can be calculated. Bank loan as well as current liability total value. Then total asset equal total liability. This is the way you have to prepare financial statement of the sole proprietorships. It has given trial balance. Additional information should be done from the beginning. Interrelated adjustment, if it has given sales invoice complete omitted, it should be done from the beginning. Then goods sent on sales or return basis if it has given. At the same time inventory adjustment and bad debts and doubtful debts adjustment. All other adjustments should be complete from the beginning. After that, trial balance should be complete. After that, income statement should be complete. Think about process. Income statement should be complete. Try to calculate net profit. Then financial position should be complete. First one, additional information. Second one, trial balance. Third one, income statement. Fourth one, financial position.